Hello, my name is Rodney DeGabriel and I'm the Managing Director of Affinity Private. Today I'm here to introduce the investment consulting process that I've been using now for several years with my clients' portfolios and the person behind the operation, and his name is Michael Karagianis. Michael Karagianis has headed up private investment consulting since 2010. So by way of background and introduction, Michael started his career at Treasury in Canberra. Then that led him to working for UBS as the head of asset allocation, then on to Aberdeen Asset Managers over in London as the head of investment strategy. Welcome, Michael, to Affinity Private. How are you?
Oh, thank you, Rodney, and very well.
Thank you. So tell me, PIC, or private investment consulting, what is private investment consulting and what does it do?
Well, as the name suggests, it's an investment consulting process that really aims to work with senior advisors such as yourself to help build better portfolios for clients. As simple as that, really. But in reality, what we aim to do is try and identify the client's investment objectives as they state them, and then build a portfolio that tries to meet those objectives, but importantly do it with as little risk as possible. And I think that last point is very critical, because we find that a lot of portfolios that are built for clients tend to have far too much risk in them, but it's not apparent to the client until something unforeseen and negative happens within markets, and then they do find out quite badly. The type of clients that we work with generally are high net worth in nature, which means that they have spent a lifetime often acquiring and building wealth, and often the last thing they want their advisor to do is lose it for them. Unfortunately, we go through events like the global financial crisis, and that can be very painful if a portfolio is not built correctly. So we spend a lot of time calibrating the portfolios to meet the risk as well as the return objectives to try and deliver a better all-round outcome.
So how is that analysis actually conducted?
Well, we spend a lot of time using in-house tools to analyse portfolios, and what we do is effectively stress test portfolios for a whole range of market environments, so that we can tell clients not only what a portfolio might do in very positive investment environments. I mean, it's nice to know that, but probably what's more pertinent is how a particular portfolio might perform in a very negative market environment. One of the dangers, I think, and one of the problems that is within the industry is that people believe that everyone will see the next GFC coming, and the reality is that that's not the case. People will get caught out and surprised once again, and so by being aware of what a portfolio might do in anticipation of an event like that, we believe that in the first place at least people will be forearmed with that knowledge, but also it might encourage them to try and better build the portfolio. So if something like that happened unforeseen, then their portfolio would actually withstand that type of environment better than otherwise. And that's a really important distinguishing characteristic, that stress testing of portfolios for a range of investment scenarios
and environments. Yes. So now, asset allocation. Why is it that important?
Yeah. We focus on asset allocation. By that, what we mean is that what we feel is less important is stock picking, which particular companies are going to do particularly well within the stock market. We think it's actually more important to understand how much exposure you have to the stock market and whether it's appropriate for your needs, as opposed to
risk profile.
Yes. As opposed to other asset classes such as bonds, international investing, cash, alternative asset classes. By bringing the right mix of asset classes together in what we call the asset allocation mix, that is actually going to control 90% of your investment destination. It will control the ultimate investment returns that you get. It will also, more importantly, control the investment risks that you get. But so little time is spent on that by many investors. They tend to fixate on who's managing their money, what particular stocks they're investing in. That, in essence, only probably contributes about 10% of the overall equation. We spend our time looking at getting the architecture right of a portfolio, principally focusing on that asset allocation decision.
Right, thank you. So how I look at the benefit that you've brought to my clients and their portfolios is that you've been able to create, let's say, a blueprint And the value that that's brought to my clients is the consistency of returns, the mitigating of risk, the reduction in volatility of their portfolios, really achieving the consistency of return, whether it's of capital or income in nature, over a long period of time. So does that pretty much sum it up?
Yeah, what we try to do in essence is take out the roller coaster nature that we
Right.
see
Yes.
endemic to a lot of conventional portfolios and conventional
Traditional
approaches.
type of approach, yes.
And by bringing together a more sophisticated portfolio strategy, incorporating asset classes that a lot of our competitors perhaps don't utilise within portfolios, we think that
Like absolute return funds or...
absolute return, alternative asset classes, all of these can provide a contribution to a portfolio in terms of managing risk as well as return.
Yes.
So bringing that together in the right combination, which is often very unique for an individual investor. And unfortunately, what we tend to find is that within the industry generally, people are lumped together and given more of a generic model portfolio-based type approach rather than specific attention to their particular objectives.
Yes.
We think it's important to actually address an individual client's objectives, whether they relate to a particular level of return or lifestyle requirement, a level of risk that they're prepared to take, and calibrate the portfolio to actually meet that.
Right. Okay. Thank you so much, Michael, for spending the time and talking us through that process and coming to Melbourne, because I know you are Sydney-based. So really appreciate your insights, and I know that I've benefited and so have my clients from your experience and diligence in the asset consulting space. So once again, I do really appreciate your input.
Thank you, Rodney.
Thank you. I look forward to meeting you all soon.